everybody for thank you everybody for joining us today. We have Sheikh Joe with us. Assalamu alaikum, Sheikh. How are you?
Walaikum assalam wa rahmatullahi wa barakatuh. I'm doing well, alhamdulillah.
Alhamdulillah. Great to see you as always. How are things?
Everything is great, alhamdulillah. Can't complain.
Alhamdulillah.
How about you?
Alhamdulillah. 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 Can't complain. So today we wanted to talk as part of Neeyah and Muslim Finance, we've been doing a bunch of speaker series with different folks, and wanted to talk to you today a little bit about, um, do we actually have halal finance? Is that achievable? What does it actually look like? I think over the years, there's been a lot of skepticism almost in the current options that are available today. And some people honestly believe that it might not even be possible to exist in, if you live in the United States. And so maybe we can start off a little bit with, describing what are the principles of Islamic finance. Then maybe we can talk a little bit about, like, obviously riba is one component of it. What does that actually mean? Someone asked me the other day of where's it defined actually that riba is interest, and is the exact definition actually interest? Maybe we can get into that too. So,
Yeah,
but let's start off with maybe the principles of Islamic finance. What it should feel like.
what it should feel like, yeah. So I would say that and actually like the way that you frame that question, like what it should feel like. I think that Islamic finance should feel like good finance. Islamic finance should feel that you have sufficient information, sufficient transparency into the transaction, and a feeling of a win-win. Um, Now, I think it's important to predicate that on maybe not immediately, and I say that because somebody could easily say, "Well, I do the same when I get a working capital loan from my bank. Like, it's a win-win." But when you're upside down in your mortgage, or when your business is not able to generate the revenue, then you don't feel it's a win-win. You feel that there's a problem there, right? So we're talking in general. But there should be sufficient transparency, sufficient overall benefit for all parties involved, and a sense of equity in the transaction, right? But Islamic finance and finance in general is more than just a feeling, right? So those meanings or those feelings should also be reflected in the documentation, and they should be reflected in the documentation in a way that is substantive. And I think that's kind of what hits at the heart of what we are going to talk about today, if I understood some of the notes that you sent me, right? Because one of the reasons why people feel the way that they do is that, unfortunately, many people that have been involved in the Islamic finance industry maybe have not explained things as well as they could have, or even maybe sometimes there's some of that clarity and transparency is missing from some of the transactions. Um, and lack of clarity or transparency might have been allowed as an exception to a rule because of a scholar giving the impression that that exception was necessary. In the reality, it might have changed, or it might have not actually been a necessity, or there might not have been a need for an exception at all, right? So that's part of the discussion as well, right? But
There's yeah, go ahead, sorry.
no, no, go ahead, go ahead.
No, I was gonna say that in the scholarly review and aspects, there's often always context and situation that needs to be taken into account, right? When you're giving rulings. And do you think that it feels like to me that um now, with kind of where we are in America and how Muslims have kind of built some amount of foundation, that there is kind of some push that it's changing or wanting to change. For we started off with solutions that may have kind of fit into a, whatever the terminology is, a square in the peg hole, and
Yeah.
and now we're itching to have something that kind of more aligns with our principles.
Well, I think two things have actually happened. I think that, well, actually, maybe even say three. I think that we have a level of healthy skepticism
Hmm.
to the point where many consumers are not they're not willing to simply take a religious justification, meaning that it's not a I believe it to be correct, right? I mean, we have to give credit where credit is due. A lot of what happens with any segment of the economy is that they are going to be true believers, right? Whether those true believers are correct or not, they really pushed the industry forward in the beginning. Very
Mm,
recent example. If we didn't have people that were such true believers in Bitcoin, would we have had an altcoin market? No. But regardless of what you want to say about crypto and Bitcoin and all of that, true believers really kind of get the industry started. I don't think we would have had the challenges to the international banking order from Muslim majority countries in Sudan, in Iran, in Saudi Arabia, in Pakistan, very prominently, if there were not true believers that yes, we actually can do and create something that is viable for ourselves according to our own values.
mm,
Um, so that said, I think that we had a lot of true belief in the United States industry, Islamic finance industry, coupled with regulatory restrictions in the 80s and 90s that maybe have changed, right? So their approvals were much harder to get. Banks were much more hesitant, and investors were much more hesitant to anything that reeked of or even smelled like alternative financing, and risk profiles and underwriters were much more strict in what they were willing to underwrite. So we've had a change in mindset where people are saying, "Look, I'm a believer in the system, but I also need to tangibly understand what I'm getting into." So that's one major change. Number two is that regulations have changed, and have allowed for a lot more to be done. Um,
yeah,
and then I would say, number three is that we're simply dealing with a level of consumer that, because of the context they live in, must be more frugal, and by nature of their own financial literacy, will can push the industry towards something which is better. So I'm a big advocate of us not saying, well, just because it's labeled Islamic, just accept it as it is.
yeah,
Even if something was 100%, like even if I come to you tomorrow and say, Safir, I want to finance my next home through Neeyah, right? Or I want to buy my next home, a partnership with Neeyah. I should have the goal in my own self-interest to push for the best pricing possible,
yeah,
and not accept pricing as this kind of nebulous force that just imposes itself upon us. And I think that's a big result of, like, a lot of us work in corporate, right? You work corporate, you get a package, you kind of accept what you're given, and you assume that you're getting what everybody else is getting, and it's fair. And it doesn't work that way in the business world.
yeah, yeah, yeah. Those are some great points. So, I would always get this kind of response in terms of like the home mortgage companies is like, well, the Islamic ones are more expensive, but
Hmm.
that's not necessary. That is one component. Cost is one component of kind of what makes something, or is it even a component of what makes something a halal financial instrument to use? And maybe you can touch upon what is riba,
Hmm.
actually, like what is the definition, and kind of what's the impact about you've already kind of mentioned the impact around it that we've kind of seen overseas, um but maybe what it is and kind of the effects of it that you can actually see in interacting with some of these instruments.
Yeah, so I think that cost is an important consideration, and it can at times be a red flag for a non-optimal deal. But
Mm,
it doesn't always equate to it being unfair or being wrong. And what I mean by that is that you and I might go into a partnership, okay? And I'll say, okay, Safir, you and I are going to go into a partnership, or you and I are going to, maybe I'm going to buy an asset from you. I'm going to buy a car from you. right? And you're in the business of selling cars. So what is the part of the business of selling cars is telling people that you've sold the car, right? So if I go in and I take everything at face value, I'm going to be priced one way. But if I come in and I say, Safir, I'm a public figure. I don't want anybody to know that I'm buying this car. This car is going to be used by my family. I want complete privacy. I don't want you to put anything on the internet about it. Well, that's going to cost, right? So now you're going to work in the cost of confidentiality or whatever it is that I'm asking for. And I
Yeah.
say that to say this isn't the issue with Islamic finance contracts, but I reviewed the contracts of many of the companies out there, and the assumption that they are all the same, or that there's no difference between a conventional contract, is simply not true,
Yeah. Yeah.
because there are certain protections at default, and certain allowances for lack of better terms, the debtor or the borrower, in this instance the home buyer, is given, which are not always there with a conventional contract. And those have costs, right? In order for me to assume the risk of giving you more time during financial trouble, I'm going to price some of that in, right? I think what happens is that, again, in a consumer society, we become so used to thinking, well, I should be getting what everybody else is getting, and not understanding that, no, this is not the same. Maybe if I can give another example, right? You're active in the stock market, right? You
Yeah.
have your list, mashallah, of shares and things like that. A very common sentiment that I find with people that are getting into investing is they think of, like, okay, well, I'm gonna invest I'm gonna invest in a brokerage account. Now you're gonna invest through a brokerage account. All right, well, why can't I just take my money out at any time? Why do I need to buy and sell the share? Because the nature of what you're putting your money into is different than a bank account. So your home mortgage is not going to work the same as, like, say, for example, putting money into a real estate investment. It's just not going to work the same. The money's going to be tied up. There's going to be certain stipulations on when you can take it out, when you can receive dividends, and all of that. So I think the contractual particulars are many times beyond the scope of the average buyer. So they immediately equate everything to cost. Now, I think that most people wouldn't mind the cost if there was actually great customer service. But,
Yeah.
but a big problem that we've seen with almost all Islamic mortgage companies has been bad customer service. And you know again, and I think, again, that's an issue that is related to cost, but maybe not on the side of it costing us money, but maybe the people employing them not wanting to pay as much, and therefore having lackluster help, right? Um but again, that doesn't equate to it being the optics don't equate to the reality being haram.
Mm. Yeah. So maybe we can touch upon like what is the premise of riba, and maybe if you can elaborate on the definition there, and why it's something that we should take so seriously.
Great question. So most of the appeals that we make to riba, or that I've seen made to riba, a lot of times we'll talk about the detriment to society, um, and the religious the religious rejection of it. Then would be harbi min Allah wa rasulihi. Allah says, then take notice of a war from Allah and His Messenger, and all of the verses about riba that are there. What I think is sometimes missing from our conversations about why riba is bad is what it actually means in the scale of human dignity. Because myself, as a middle class American with the ability to use a credit card every day, to maybe apply for a home equity loan and get and borrow against the equity in my home, to get a mortgage, to finance a car, Riba is great for me, right? Just as a average middle class American,
Yeah.
my view is this is great for me, right? But what we don't realize is that there's never something that you are getting except that you're also giving something else up. And so, when I'm getting this benefit of financing something because I have more money and because it's more than likely because of my credit profile that I'm going to be able to pay. My neighbor who has a worse credit profile and the inability to pay is actually not given the same terms,
Yeah.
which means that they are denied credit. They're denied interest-bearing loans. And if they are given those, they're usually given those in the effect of, you know, um, uh, you know, you know, 3 to 4 to 5 times more than what I would pay. Now you might say, well, I'm not harming anybody, so what's the problem with me? Well, the lack of equality in the access to credit compels others to be charged, compels those who are less likely to pay more,
Mm.
which puts a stress on their life, which causes a stress on society as a whole. So societies that have fair access to credit and fair access to cooperative banking have shown to be less stressful and have less crime. Whereas communities where there is rampant lending, right, loan sharking, taking advantage of the poor, are generally seen that there's generally more poverty, there's more crime. So prosperity comes with fairness, and a lack of prosperity comes with a lack of fairness. And you might say, well, I don't see this. You actually do, but you don't realize, because what you're being told is the invisible hand of finance that's completely detached from the values of the country, the great country that you live in, is actually what you're seeing of boom and bust cycles in the economy is a
Mm.
direct result of the credit crunches and the refinancing that you see. Somebody is always left holding the bag. Now you might say, okay, again, but that doesn't affect me. 2008, 2014, recently in the last administration, we saw massive bailouts of whom? Not of Main Street, of Wall Street. Why? Because the credit crunch got to the point where no one could come in except for the government and force the taxpayer to soak up the losses, right? So the biggest problem with the interest bearing system is that we have privatized gains, socialized losses.
Yeah.
It would be much different if we had socialized gains and socialized losses, where everybody was operating, equally. Now, take that a level beyond your locality. So we're talking about neighborhoods, talking about cities, we're talking about countries. Take it beyond your country. Anytime we have a 5% interest rate here in the United States, emerging economies are being charged 25% by or more by the IMF and others, right? And then we wonder, why is there political strife? Why is there difficulty in other countries? All of this is systemic. It's like dominoes, right?
Yeah.
So the danger of interest is not many times not palpable to the individual, right? But you see the stress of it show up in your life, right? Which is why when the Prophet ﷺ was dealing with
So,
um uh he was teaching his companions about interest, he didn't tie it to just the fact that, oh well, you've lent, one gold coin for two gold coins, although he did define that as interest. When Bilal radiallahu anhu brought him dates, and he said, "Oh, are all of the dates of Khaybar like this?" He said, "No, we take," and I'll just use kilos as a stand-in. He said, "We take 2 kilos of the low quality dates, and we buy 1 kilo of these fine quality dates." The Prophet ﷺ, he said, "Awwah, awwah, aynu riba la tafal." He said, "Oof, oof, this is the epitome of riba. Do not do this. If you must, then sell your dates in the market for silver, take that silver and buy the better quality dates." This is, I think, a very important hadith, more important than even some of the others that talk about riba being gold for gold and silver for silver, because it points to a systemic issue, right? Yes, it might be more efficient for me to go up to Safir and to get a loan for $1,000 and pay him back 1,100. That might be more efficient. But what I'm also doing is that I'm concentrating wealth in one area, in one segment of society, and allowing it to earn above and beyond the real economy. And so when I'm earning above and beyond the real economy, I'm actually the only welfare class. The only welfare class is the interest earning class in society.
Yeah.
Everyone else is kind of shoveling money towards them because once they have a monopoly on that earning, then then nothing else it can be done. But if I peg it to the market, to actual real economic activity, then not only do I have fair pricing for myself, but I have more negotiating power when I'm trying to get the goods and the services that I want. So, there are two things, and I'm sorry for the diatribe, but you mentioned about like how would we define riba. So I think there's two approaches to looking at riba. Number one is the idea of a riba sarih, like um um uh, clear cut explicit riba. And I think the simplest definition is an asynchronous exchange of money for money. So I give you money, I get the same money back more. I give you 100, I get 110 back. And somebody said, "What's the big deal? I'm charging you for the use of my money during that time." So if you and I were sitting here and I said, "Hey, you know, give me $2 and I'll give you $1 back," you're like, "What are you? Why? Why would anybody in their right mind give $2 in exchange for $1?" Well, it's for the privilege of being able to do business with me, essentially. In reality, it's one party is able to lord over and pressure the other party into doing so for some kind of other societal or tangential need. So simple interest of $1 for $2 was prohibited to stop people from going down a slippery slope of allowing all other forms of manipulation and central manipulation of cash flows and centralization of those cash flows from happening. Then we have on the other side of explicit riba is we have something scholars will call shubhatul riba, and this is the implicit riba or maybe the appearance of riba, which may or may not always be there. So let's say, for example, we talked about buying a car. I bought a car from you on payments. I gave you $2,000 down. Now I'm going to pay you 1,000 a month for 14,000 total, right? So what if I said, "Hey, Safir, every time I pay you early, right, you're going to give me a discount, a pre-negotiated discount on the amount that I get, that I end up paying. So every time I pay $1,000 early, so I pay $2,000 this month, you knock 100 off of the end, right?" Now, if I'm pre-negotiating that, then some scholars have said, well, that looks like what you're actually contracting is the money as the object of sale and not the asset. And so they consider that to be shubhat riba. Another thing that happens as well, and I think this is something that is pertinent to what we're talking about, is where if I say, "Hey, Safir, you and I are going to go into business. We're going to buy a home. I'll put down 20%, you put down 80%, and we'll share in the rent that we get, the lease amounts that we get from that home." But you say, "Okay, that's fine, but Joe, you have to pay all of the insurance." Okay, but if the rent that we get, let's just use you know flat numbers, straightforward numbers. If we get in $1,000 a month in rent, that means that you get 800, I get 20. If we're at 80/20, but if you're putting the insurance on me and the insurance is 100, in reality, I'm getting 200 minus 100 and you're getting 800 plus 100, right?
Yeah.
Or at least plus 50, right? So while it look like a cash for cash loan up front, the mechanics and the equity behind it is exact same as riba. You're getting more for not actually putting in for not bearing risk more than just the credit risk.
Yeah. You know, one interesting thing as you were speaking that really came to mind to me, and this kind of goes to the next question that I had was maybe around like what are we trying to achieve with, halal finance?
Yeah.
Is if you and I were to do business together, whenever I do business with people, the one of the core principles that like my father taught me was to make sure that your risks, that your interests are always aligned with each
Mm,
other. They
yes.
should not be two separate things. Maybe two people are taking different risks, that is fine, but the interests of how we of what we both want should be aligned.
Right.
And it seems like no matter how you slice and dice it, a riba-based instrument fundamentally almost always never has interests aligned.
Yeah.
The two parties don't have the interests aligned.
I would agree. Yeah.
Um, and so, what do you think that should be like? What are we trying to achieve with halal finance? Like, you know, um, is it something where both people participate in the risk and the reward? What are kind of some of the fundamental principles there?
Yeah. So I would say that the fundamental principles are about justice and fair distribution. Number one. Number two, that you have interests which are aligned, so there's a win-win situation that's coming out of it. No one is worse off for getting into this situation than they were before. And then three, there is a clear transfer of benefit that inures to the person who put money in it. And I say that instead of saying profit and loss sharing. And here's why.
Mm,
A lot of times there's been almost a misnomer in Islamic finance circles that everything must be built on profit and loss sharing to the point where it's almost forced at times. Is profit and loss sharing essential for a partnership? Absolutely. But is profit and loss sharing essential for an asset sale? Absolutely not. Because once I've sold you the asset and you've bought it from me, we no longer have any relationship between each other. Any losses that happen after the fact are ours to bear as long as there was transparency before. Now, obviously, if you sold me an asset and we're not upfront about some of the problems with that asset, I have recourse, right? But I don't necessarily. It doesn't make a partnership um, for the financing of an asset any better than a sale for the financing of the same asset. Um, what's important is that we've both contributed to a transaction in which we have benefits that inure to each other. And I think that goes back to what you're saying with like interests being aligned, right? So when we're in an interest bearing transaction, like you said, I think inherently there are going to be interests that are above and beyond and any type of the outputs are not equal to the inputs, right? um and the recourse is actually very different as well, right? But as if what we're trying to achieve with sharia compliant financing or halal financing or however you want to say it is that we're looking for justice, fair distribution, and then long-term creation of value, and creation of value that inures to the people that actually put the inputs in. Um, and that doesn't always happen, right? When you're, or many times doesn't happen when you're simply banking on, um, instead of risk sharing, right? Either through a sale or through a partnership, you're transferring risks, right? So I have the benefit that inures to me in the form of the interest rate, right? But I'm not taking any of the business space risks with the money that I'm giving you. Right? So I'm not actually walking away from the situation, nor am I sharing in the situation, but instead um, I'm benefiting um, without actual skin in the game.
yeah, yeah. Okay, I see a lot of questions coming in, so we'll go for a few more minutes and keep the questions coming.
Sure.
I don't want to digress too much into into this, but the two fundamental models that we've seen kind of in terms of like home financing are generally partnership based models
Yeah.
and cost plus models.
Yes.
And maybe you just want to clarify, especially in the cost plus model, some people would say like, well, aren't you just exchanging $1 for $2? There's some prerequisites there. Maybe
Mhm.
if you just want to cover that real quick.
Yeah, sure. So there's two things, or let's actually talk about the very basic way of a conventional mortgage works, which is Safir and Joe enter into an asset sale agreement. I check a box on the application to purchase the home from you, that I have purchased the home from Safir, with the contingency that I will be bringing financing from a third party. I then go to a third party and I say, hey, you know, Safir has a home that he's selling me for $200,000. I have, 50,000 or 20,000, 40,000 of that money. I need you to put the other 160 in. And they say, sure, here's the 160. We're going to charge you an interest rate on top of that 160. So there's a little bit of a sale, right? There's a portion of it which is based on a legitimate sale, but a financing through debt and through an interest rate of the remainder. The cost plus sale. Now notice that financing party holds any liability. They never hold any ownership. They have no skin in the game other than providing funds and profiting off of the interest that they charge. In a cost plus sale, the stipulation is, and I'm talking about in a perfect world, we're not talking about what industry people might do, but in a perfect world, if I wanted to do the same, let's just say it's, you and I are in the same situation, and the third party now says, hey, I'm not going to loan you the money, right? But what I'll do is I'll go and I'll buy the house from Safir for 200 cash. I'll give him the whole 200. Then you pay me your 40,000, and then you buy me out of the rest over time, and I'll charge you a markup for that. But what is he doing? He's taking ownership of the asset first, so bearing risk in the both the market and the credit risk, right? Reselling it, so there's some operational risk in the long-term sale of that. And then when he recuperates, he's not, or if there's a default, he's not I'm not defaulting on a set amount of money with with an interest rate attached to it. I'm defaulting on an asset. That asset returns to him. Whatever equity I have comes in, goes out. The last one is the diminishing partnership model, which is kind of like a partnership slash lease, right? So again, 80/20. I put in 20, you put in 80. We then look in and see, okay, let's just say rent on this building is 1,000. Every month, you should be getting $800. I should be getting $200. So in lieu of me living there and using the building and being a part owner, I'm going to pay you the lease, and then I'm going to buy you out over time from that. Now, the issues that have shown up with that is the fact that many times that buying out of the other party is forced,
Mm,
and that other party might not actually be interested in a partnership to begin with. In reality, they're looking to arbitrage an opportunity of someone's need, and then take that note and resell it on the secondary market to people that'll service the debt. So there was never really a partnership that was intended, and they're profiting off of many times the fees and things like that that come from a partnership, which are not there, right? So in a perfect world, could either of these two, cost plus or diminishing partnership, work? Yes, but not if you're trying to keep up with the 10-year T-bill rate, and not if you are forcing a sale where you're trying to meet a certain IRR, and you need to report to your investors, because you've got to move volume, right? So
Yeah.
the problem with the diminishing musharaka comes is that it almost appears to simply be a legal fiction that's there for in investing now, and that because why you're forcing the person. Now, if we went into the same agreement, you put down 80 and I put down 20, and I rent from you, right? Anytime in a regular partnership, anytime either of us wants to sell, right, then we have to give the other person the first right of refusal, right?
Yeah.
So I say, hey, Sapir, I'm interested in buying you out of what you do, of what you have, your partnership with me in the building. I can afford to put down, and I'll have 10, 30%. I'll pay for 10. I'll have 30%. You'll have 70%. And you go, okay, sure. I mean, you have the first right of refusal anyway, right? Like if you wanted to sell that 10% to someone else, you couldn't unless you were giving me that right. Right. So now nothing has fundamentally changed in our investment in seeing this asset grow and generate revenue, except for the fact that there's been an adjustment in the ownership, the share of the ownership, based upon essentially a, inst, a newly agreed instantation of that at the time that it actually happens, not one that's forced. So I think that's a huge difference of what happens in the market right now.
Yeah. Yeah. I think so we'll go for maybe one more question, then we'll jump into the Q&A. I think that people have kind of taken finance to almost like a dirty word because of kind
Mm-hmm.
of where where things are currently today, right? People just feel like it's messy, it's almost given up on it, and kind of stuff like that. And I think having I'm one of the co-founders of Neeyah. We provide home financing in a true partnership way. We share in insurance, taxes, the gain of the house, the loss of the house. Um, and then recently we have another company that provides working capital for inventory financing where we share in that risk, and only when we only get paid for our partnership when that inventory actually sells.
Right.
And one of the things I've come to realize is that um, the Islamic way is fundamentally a better way for all people involved. It's better for the or it should be better for the recipients, and it should be better for the investors as well, right?
Mm-hmm.
Where you're participating in the risk and the reward. Like for Nia, we have a partnership model, but they're also a tenant in our home. So why wouldn't you want a tenant that owns part of the property, that wants that feels like it's his own, versus having a traditional landlord tenant relationship, right? And in the inventory financing model, why wouldn't you want a situation where you're not trying to time your interest rate to when you're actually selling your inventory, and it's just a misaligned kind of set of incentives?
Right.
And so maybe you can speak to, you obviously work with many different companies. Um, maybe you can speak to like what are some positive signs that you're seeing of kind of where the industry is moving to, and kind of how close are we? Is it something that we can achieve?
Mm-hmm.
um and maybe even as individuals, what steps that we can take towards that?
Yeah. So I think that there are some positive signs. I mean, I get a number of calls from people that are interested in either creating companies or asking about concepts or wanting document review, structuring private deals, things like that. So I think that and they found that, private deals where interests are aligned are better. They might be a little bit more tedious in the beginning, but they are better in the long run for themselves because they're not forced, it's not the square peg in the round hole type of thing. I think as well, another positive is the fact that there are there are so many other, even not outside of the Muslim community, there are so many other alternatives to the predominant system that are coming up, right? So look at the e-buyer movement, right? It was really big in the last couple of years. And what do e-buyers do? They step in, they buy the home, they help you find another home, and then they sell the home that they bought from you. And they're actually taking true.
Risk. Yeah.
ownership and risk, and they're holding title. And they're doing it because they're finding, hey, here are people whose interests are aligned, their risks are aligned, they all want the same thing, and we're going to make money off of facilitating that. Instead of charging them for the use of the money, we're actually providing a service. So I think that there's a number of services. I think certainly Neeyah is one of them that are changing the they're changing the face of what it's known. What I mean, because I can tell you, I'm asked about these questions all the time, right? And it's very relieving to say, yeah, actually, there like all of the ideals that you want, there is a company that's doing that, and
Alhamdulillah.
that I think in and of itself is a positive, and I think that that speaks to as well that more people are wanting to do something, and it goes back to like the model of growth in Islamic finance. Right, the model of growth is not the unicorn type of model where you're looking for exponential returns in an exponential amount of time, right? And to guarantee everything up front so that you can exit and leave it for someone else, right? What you're looking for is steady growth where profits, grow with operations, and operations are ethical and fair. So profits result from things that are ethical and fair, where everyone is winning. So you get a small, a much, a much less steep line of growth, but you still get the same growth. So instead of us going like this,
Yeah.
everybody's stable and able to grow together, and that's the real benefit of it.
Yeah. All right. We have 21 questions and incoming. So let's do a rapid set of questions. Okay, I
Sure.
think this one is interesting. So there's a point made about the fairness and equality of credit costs and availability. And like how is that different than like income or food or basic things? Like is obviously there's a component of someone's ability and effort and risk that they're given by Allah subhanahu wa ta'ala, but like is uh is Islamic good like equality for all or kind of um I guess there's almost like a social component of this as well, if you will, right? And
Sure.
is that a necessity for kind of the principles that we're trying to achieve with Islamic finance?
I think it naturally will result in that, right? I think when we talk about like Mahmoud al-Gamal, he makes a very good point. He said, Islamic finance should be good finance. It should
Mm,
be something which is equitable and good for everyone, regardless of whether they're Muslim or not, regardless of whether they believe in it or not, simply because it protects their interests, supports their interests, and also protects them from the detriment of downside in business and all of that, right? So I think by necessity, when you do good business, you will have you'll have good relations with others, and that creates a better social environment for everyone.
yeah. All right, I'll go to the next question. Um, okay, this is a good one. Should we as individuals support Islamic finance institutions even if their products have problematic elements? I've heard some scholars say we should because we cannot improve until we have strong enough institutions, and others say to stay away from anything questionable.
So I would say that this idea of like it being an either or is a false dichotomy.
Mm,
Let's remember that no one is in the mortgage business as a nonprofit. They are there to make money. And so, it's funny. I've gone to communities to lecture, and there's been kind of like some of the bigwigs from some of these companies that have come to and what they're looking for is somebody to just step in and say, yes, this person is doing everything right.
yeah,
And I'm very particular in not mentioning companies by name publicly because I don't want people, using my name and things like that. But I always my message to the consumer is it's your money. Make them work for your money, right?
mm,
Do not go to a company and act as if like this is the only solution that I have and I'll never be able to buy a home. I'll never you by necessity, anybody who is involved in sales is going to smell that weakness and take advantage of it. It's just human nature. So understand that you have options out there. It might take longer than you want, but that's not something that's inherent to Islamic finance. That's with everything. But you also can't approach these things from a position of weakness. You have to like, okay, you're saying that that this is Islamic. I need these questions answered. Now, don't be pedantic. Like you don't want to make it to where it's like overbearing even on the company to get those questions answered when it's publicly searchable information. But if you have meaningful questions and they can't explain to you how their models work or what happens in a situation where things go wrong, then you can say, look, I want to do business with you. I want you to earn my money. So please, put in that effort and earn it. And I think that's really the only way that you're going to pressure companies to do better is by forcing them to say, look, I know that you've had a captured audience for captive and almost captured audience for a very long time, but I'm not willing to just say, and I've had people say they've had salespersons from companies tell them, like, look, either you use our product or you go to hell. Like that's which is horrible. To imagine you're being told that, right? Um, so yeah, put pressure on these companies. They're in the business of making money, so make them earn your money.
Yeah, yeah. Okay, there's some questions about Neeyah, so I'll just address it real quick.
Sure.
Um, if you don't know, the website is neeyah.com. We provide, again, we provide the ability to help purchase a home in an equity-based model. There's no loan or debt. We directly sit on the title with people. I think we operate in many states, but we have homes in Texas, Washington, New Jersey, um, Connecticut, and a few others. We have 18 homes as of today. And we do have a wait list, but we do prioritize people by the amount that they need, if the people that need the least amount, and the people that can also invest with us. And then we have weekly sessions both for potential residents and investors. So if you're interested, go to the website and sign up for our next sessions there. Okay, there's some more questions on. Is there a book or lecture you would recommend that I look into to help me with more examples of aligning interests?
Not that I could think of off the top of my head,
Okay.
unless you know of one.
No, not really. Maybe we'll discuss more business examples in future videos.
Yeah,
I think that might be actually really, really good thing to do.
yeah, I think so.
Um, um, I've heard some analogies to the cost plus sale to Sahab al Aina, or those who cast their nets on Friday night and collect them on Sunday. Do you know anything about this? I'm not
Yeah, so
familiar.
they're making reference to what they call I think it's called like the trivium sale or the tripartite sale or something like that, where essentially, we're you know, it's like a sale buyback from the same two people or the same three people. So sometimes you'll involve a third party, which was premeditated and colluded with to make sure that the money stays within the system, right? So I buy it from you, you buy it from this person, sell it goes to this other third party. Islamic finance stipulates that if a third party is involved in mediating a sale purchase agreement with bringing in cash and buying it for someone else, that the prices are market prices and that no one is agreeing to buy or sell before they've actually taken possession of and hold liability in the asset that they're intermediating. Whereas I forgot what they call it, the trivium or the tripartite sale doesn't do that. It's all colluded up front, so it's really just cash for cash with an asset tagging along. Um, with the issue of ashab sabt, like the people on Saturday that were prohibited from fishing on Saturday, so they cast their nets on Friday night, and then they would collect the fish on Saturday, or whatever the details of that story are. Then yeah, that's exactly what we're talking about. We don't want to be in a situation where not where where instead of real business and real negotiation, we're just colluding with each other to see a flow of funds, enrich the richest amongst us, and keep the poorest amongst us as a as a cash flow for them. And Allah subhanahu wa ta'ala addresses this in the Quran. He says, لِكَيْ لَا يَكُونَ دُولَةً بَيْنَ الْأَغْنِيَاءِ مِنْكُمْ, so that your wealth is not circulating only amongst the rich amongst you. Right. So this
Mm,
is one of the chief reasons why we have this release valve of zakat and sadaqah, and we also have the prohibition of riba, so that people are forced into mutually beneficial, economically beneficial situations.
yeah. Okay, so there's a couple questions I'm going to combine here. So in the Musharaka model, will it be considered compliant if rent for the borrower is not increased for the duration of the loan, and in return, borrower agrees to pay all the expenses, insurance, tax, HOA, etc., which is kind of how the models exist today. And then there's another question about like it seems like the profit rate and the interest rate of many of these companies is basically the same, if not more sometimes.
Yeah.
And how can a layman like me be convinced that there is more to it than this? Um, and yeah, we'll start with that.
So let me answer the last one first. Right? How can a layman like me be convinced that there's more to it than this? Um, if you ever grew up watching professional wrestling, you very quickly know that it's just entertainment.
Mm,
Yes, there is physicality and there's movement and there's they're doing the DDT and all this other kind of stuff. But in reality, it's there for entertainment, right? Does that mean that there's no such thing as real wrestling? There's not, Greek and Olympic wrestling. There's no collegiate wrestling. No, there is, which is competitive, which is not colluded, which is not, just for entertainment, but it's actually a competition where two people are coming and competing against each other. So in the same way that yes, while some companies are essentially tagging their profit rate with the Fed rate plus whatever delta they want, um, and charging people, that doesn't mean that's the only way that it can be done, and that's indicative of the principles of Islamic finance, right? It still can be done properly, and it is many times done properly in individual situations. The challenges are, how do you remain profitable at scale? And I think that's where people bank too hard on exceptions because they're not willing to put in the work to see how do you remain profitable at scale, right? And that's where you need considerable expertise. The first part of that question was again.
um, in exchange for a flat rent that does not
Mm.
change, uh, the homeowner pays for all taxes, insurance, HOA, etc.
Inevitably, that will result in unequal the bearing of unequal risks and liabilities, because those HOA fees, those costs, and all will inherently increase, and they're completely out of your purview, right? And I would say with most of the companies that say that, well, in lieu of you paying all of these expenses, we're guaranteeing a standard rate. I've never really seen that hard coded into their contracts,
Mm.
meaning expressly saying that yes, this is in exchange for that. It's just kind of taken as a given, which means that if things adversely change and there are adverse circumstances, you will be charged, and things will change not in your favor. And again, that goes back to like, what are the nuts and bolts of the contract actually saying versus what's typical because of market conditions.
Yeah, so there's a question of almost all Islamic financing companies eventually make you sign a contract that has the word interest on it.
Yeah.
So a lot of the buyers say Islamic and conventional loans are essentially the same. How accurate is that statement? Maybe you want to also refer people to the Amjad statement because a lot of people asking about which companies. I know you don't want to name them, but I think their statement's pretty clear on, yeah.
Yeah, I think if you read the Amja white paper, it'll list most of the companies that are out there. And it'll tell you they put them in a gradient, right? With co-ops at the top, and then companies that have, you know, deficient stipulations in their contracts, and then companies that are just doing the same as conventional. Um, but to address this point, and that point again was say it again.
The final contract says basically
Oh,
interest. Yeah.
so the final contract generally does not say interest. What they many times will have you sign on to is an addendum or an IRS declaration of interest paid. And the reason that they do that is so that you can claim the money that you've contributed to the home as a tax deduction, right? So that doesn't change the nature of the contract. Even let's just say we have a perfect contract between you and I, Safir, everything is good, and then I say, hey, you know what? By definition, the money that I'm paid can can be considered interest in an accounting sense because it's above and beyond the capital. Will you sign this document so that I can deduct that off of my taxes and get more of my own hard-earned money back from taxes? Not the same money I paid, but more of the money that they took, and say, we're not going to give it back until you prove to us that you've contributed to the economy. I personally see no problem with that, as long as that's not part and parcel of the contract. I mean, I
Yeah.
don't think it's any different than getting any other kind of like 1099 INT from a company that you're invested with, or any other source of income, and being able to write it off.
Yeah. Okay, we'll do two more questions. Okay, there's a question about like fiat currency and kind of the dollar, and shouldn't we be more focused on moving money outside of the dollar? Uh, I don't know if you want to discuss that a little bit.
I think that is a nice idea, but the reality is that most of us don't even have the wherewithal to think about that. And so to think that we're going to move outside of the dollar and transact in a currency which is not widely accepted and hold all of our value in that currency, I think is a type of hardship which the Sharia calls against. To make that an
Mm,
obligation, if you want to do it as an individual, you can. But to say that people are somehow sinful for holding the value of their money in dollars, or that they're doing something wrong, or that they're not doing what is best, I think that needs a proof under the Sharia. Certainly, if you want to do it, you can, but the reality is that most people don't have the time or even the forethought to do that, and they're simply trying to pay their bills and survive.
yeah. Okay, one last question. I know they're over time, but there were some questions about do you have experience in the halal savings accounts that a couple of these companies provide? And there were some questions on like potential issues that they are FDIC insured, and that second, there is a cap on expected profit rate. Yeah,
Yeah, so I don't. I'm familiar with the organizations and I'm familiar with the accounts, but I have not reviewed the actual contracts. So I would hold back on commenting in detail until I had actually reviewed those contracts. They have not made them publicly available. But I will say this: FDIC insurance is a third-party insurance.
yeah,
It is not the insurance. That insurance is not offered to you by the bank. That is a federally mandated system to ensure that banks are operational. So third-party insurance does not affect in any way any type of contract, regardless of whether it is a deposit, an investment, or a purchase.
yeah, yeah. All right, Sheikh Joe, thank you so much for taking the time. I'm sorry we couldn't answer all of the questions, but inshallah, we'll have you again to talk a little bit further about things. And thank you again, Jazakallah khair, for taking the time. And yeah,
Absolutely.
we'll see you
Jazakallah
soon,
khair for
inshallah.
having me, man. Barakallahu feek. And may Allah bless everybody for listening in. And hopefully we'll
Ameen.
do another one of these, inshallah.
Inshallah. Take care.
Take
Assalamu
care.
alaikum.